I think I do agree. It's definitely slightly lower volatility, but for the first time in a long time, at least we're seeing some consistent trends. So we see, for example, the euro dollar going much lower over the last few days. You have as well the Australian dollar going down quite a bit. And it's in the Australian dollar and also the New Zealand dollar that I will be focusing on, given the problems we have in China because of the coronavirus. Because even if, say, for example, we wouldn't have more people getting the virus, everybody right now in mainland China is hiding in their houses to make sure they don't get this disease. And that will surely lower economic activity in China, and this could directly hit countries like Australia, which have China as their biggest trading partner. Yes, I agree on that. So we have some numbers coming out next week from China. It might necessarily not affect next week's number, but the month after that, we should definitely see some impact. Now, remember this as well, that most people are on holiday right now. I do a lot of business with China, and we have ATFX itself has a big office in Hong Kong, and everybody since last week is pretty much on holiday. Usually you receive emails back and forward, but now because of the Chinese New Year, people are at home with their families. And so I think when things come back to normal in a week or two, I think, or maybe as early as next week, at that point, I think you're going to see a bigger reaction. Because remember that places like the Shanghai Stock Exchange, they're pretty much closed, right? So when they open up again, I think that's when you're going to start to see the bigger moves in the market. And then next month, when we get more data that impacts this period specifically, then I think we'll continue to see more volatility. Yes, I think so too. If you look at the rates markets, they're giving it a 60% likelihood that they're going to cut interest rates on Thursday. And if you look at the next meeting is going to be in March. So if we have Brexit now, as we're supposed to have by the end of January, and if the markets continue to be very volatile, I think it's going to be maybe almost a bit too late for the Bank of England to cut in March. If they cut before the meeting, people are going to get really alarmed, and they can potentially see this as a warning. So I think there's a slightly higher likelihood than a 60% cut on Thursday. I think maybe it's closer to 80%. And if it's not this month, it's most likely going to be in March. Because if you do look at the economic data for the UK, it's not really improving so much. And if you look as well at the inflation, it's going in the wrong direction. So I think they're going to cut. It's just a matter of when.